right, y'all. So I want to talk about something that I really think can help a lot of traders looking to extract money from these markets. And I'm going to be talking about finding good trading setups in what we might call sideways C's, right? Those market conditions where it seems as if the price does nothing for a very long time, then boom, we have a massive move, and then it does nothing again, and then boom, a massive move. And what I want to talk about is how to catch these massive moves. And so I kind of want to walk through a few trades that I've taken during the past few days and talk about my mindset, why I was looking for the trade, what made me get into the trade, and hopefully this can help you in your trading endeavors. Of course, this is not financial advice, but make sure to like the video, guys. Make sure to subscribe because I do believe this information can help a lot of people, and it definitely helps out the YouTube algorithms. So I want to talk about the short that I took from right here. I took a long from down here, but I'm not going to go over that because it was kind of different. And then the short that I took here, and then again this morning, I took a short also from right here. And just so you guys know, I'm not making this up. The first short, I literally gave the signal in my VIP Discord community during the Thursday morning live stream. We were looking to take the short live. We were watching the order flow to see if there were any trapped longs, longing the resistance. We were looking at our level. We were looking at market Cipher B coming down to see our confirmations on the 6 minute, on the 1 minute. Shout out to everybody who took this trade. The second short that I took from right here, this is a setup that I gave in advance in my VIP Discord. I literally gave the setup before it even played out. And I drew on the chart exactly what I was looking to see, on market Cipher. We come up to the level, boom, right into our zone, got our confirmations, locked in the profit. And then again this morning, guys, was looking for the short from up here. We hit that level and boom, look at that, massive rejection right from it. So I'm going to be walking you through how to identify these trade setups, the mindset you have to have going into it, and how you're going to actually plan for these things in advance. And I've broken it down into 4 steps. By the way, if you want to get into the VIP community where we post these things in advance, in addition to posting daily levels for multiple assets, even charts that you can import into your own trading view, you can go to patreon.com/Jason Casper. We have a thriving community in here of people posting TA, posting good trade setups, some really great traders, and we prioritize learning and building each other up. You can go to patreon.com/Jason Casper. All right, so these are the 4 steps, guys. And the first 2 are more straightforward, more intellectual. The second 2 are more psychological, and I believe trading is very much so a psychological thing, and so hopefully this will really help you lock in your strategy. So when we are looking at markets like this, okay, because Bitcoin has been trading pretty sideways since April 11th. It's currently the 17th, so the last week we've been trading primarily in like a 2% little range here. So how are we able to make so many good trades in such a small range? These 4 steps, guys. Number 1, look for a juicy level. There is always opportunity regardless of what the markets are doing. All you have to do is identify key levels where you know price is probable to have a reaction. And the first thing we're going to do that is identify our environment. Now, there's going to be 2 main environments that you will see any asset trading in. Environment number 1 is a sideways market, a very sideways market where there's clearly defined lows and clearly defined highs. For example, this right here, we can see that we have a very clearly defined low and a very clearly defined high. In fact, if we take off all our analysis, we can simply just draw horizontal lines from that first initial high that we put in right here, and then we could come down to that first initial low that we put in right here, and we can see that that high, every time we come back up to that high, makes for a short. 1, 2, 3 times, boom, all 3 winning trades. And then this initial low, when we come back down to that low again, a long. And so it's basically the old adage that every single, and you know this is true, right? This is true. If you got into trading, if you had mentioned it to any older male relative that you had, right? Your Uncle Joe, for example. Good old Uncle Joe, right? Uncle Joe, you know what, man? I'm getting into trading. And what did he say to you? Of course, every old male relative you have has a southern accent and is an investing expert. So he said, yeah, trading, huh, son? Let your old uncle tell you, learn you a thing or two, all right? All you got to do when it comes to trading, son, is buy low and sell high. right? That's what he told you. And you know what? You know your uncle isn't that good of an investor. You know he's not living the life. He's poor, man. He's living paycheck to paycheck. But he was right about that. I'll tell you, he was right, because if we simply just buy low and sell high, that is going to give us a high probability of success in trading these markets, right? You can divide anything up into a sideways range. Anything, right? Look at this. Clear low, boop. Clear high, boop. Makes for literally one short, one long, one short, one long, one short. You got all these winning trades. And of course, you're going to always have a losing trade. If you're buying low and selling high only based on these lines and nothing else, obviously when you buy low here, you're going to get stopped out. But in general, you're going to be winning more trades than you're losing. So that is very important. Step number one. But when you are also in a sideways market, the second thing I like to do is I like to come over here to prediction and measurement tools, come down to fixed range volume profile, and look at the volume that traded here, because what this does also for us is it identifies areas where Bitcoin or whatever asset we're trading is considered to be a fair trading value. Why is this considered a fair value? Because this is giving us a profile of what price the most asset exchanged hands. So we can see here that during this entire sideways market, most of the Bitcoin was bought and sold in this area right here, establishing a fair value for the price. If the price comes higher than that fair value, well, we can expect to move back down into fair value. And if price comes lower than that fair value, well, we can expect to move back up into the fair value. So this is refining and removing all the dross from our lines that we drew by hand, basically telling us that if at any time we come down below this fair value area, we should start looking for longs, and if we come above, we should start looking for shorts. And then the third thing I do after looking for clear highs and lows with my eyes, after drawing the volume, is I look for other confluences. This is very important. When it comes to buying low and selling high, you must have confluences. And one of my favorite things to do is look at fibs. And so let's say we come to the chart and we can see that we are trading something like this. You can say, okay, I'm looking for a long here. Let me see if there's any confluence. Maybe you'll pull your fib from the swing low to the swing high, and you tell yourself, well, look at that. You know, I was maybe looking to take a long from this golden pocket, but I missed it. Let's see if there's any other confluences down here. Turn on your 786 level. You could say, hey, look at this. We're coming to the 786. Maybe it's a good time to look for a long because I have a confluence. We came down to a fib level while we are oversold. And then what happens from that area? We get a eventually move to the upside, right? Look at that. You would have been in drawdown for a little bit. That's okay. Now, how did I get into the short that I was looking at when I first showed you the setup that I gave right here? Okay, now I didn't take that long just because I wasn't. I'm just giving an example, but this short I actually did take. And the reason I took that short is because I saw that we had a Fibonacci golden pocket from the swing high to the swing low, and there was very much so a confluence at this value area high where we would have been considered overbought and the golden pocket, okay? So what I've done is I have looked for a really good potential setup saying, if price comes back up here, right, because I'm expecting it to come back up from the low, then I will look to see if I can take a short from this golden pocket where we also have the overbought area, right? So I'm saying to myself, this is a trade setup I would like to take if price comes to that level. And now this is important. Now we need to imagine what we want to see, okay? So when we are looking at our trade setups here in the VIP Discord, what do we want to see as we come up to the golden pocket? Well, I want to see something very specific here, very, very specific. Let's make this image a little bit bigger. I wanted to see market Cipher B as we come to the golden pocket, right? Look at that, golden pocket right in the overbought area. I wanted to see something like this. I want to see momentum getting lower as the price is getting higher into our level. Why? Because that is showing us that not only is the price itself in overbought territory, but the indicators themselves are also now in overbought territory. Okay, when the indicators come up above this negative, this 60 line, that is considered overbought. And so we're looking to see that the indicator and the price also is in agreement. Now, something else about the divergences. If we see something like this, okay, and the momentum is getting lower as the price is getting higher, that is called a divergence. And one of the great ways to be able to identify these is by looking for a pattern that looks like uneven butt cheeks, right? We want to see that first momentum wave nice and big and round, and then the second momentum wave not so big and round, right? It looks like a butt that's a little bit crooked, kind of like this, right? When you're at the club all night, right, and you're partying, the lights are off, but at 2 a.m. the lights come on and everything just hangs out, and you might notice something, right? It's a party. People think the trend is never going to end. Right? When Bitcoin's trending, people think it's never going to end. But when those lights come on, right? Boom. You see those uneven cheeks. But when we're shorting, okay, we have to understand that we're seeing those upside down, right? Where we see that big juicy cheek on the left, we just want to grab onto it, okay? That is our anchor, okay? That's the anchor wave. And then we see that smaller trigger wave as the price is getting higher. That tiny little wave, you know, it reminds you of that waitress at the diner. You know the one I'm talking about, right? She's super skinny. She got a Brooklyn accent. And for some reason, you never know how, but she's always there, right? You go there at like 1 o'clock in the afternoon. There she is somehow. You go there at 2 in the morning. She's there too. How is she there? Always. Does she ever sleep? No, she don't sleep. Why? Because she smokes cigarettes all day and it keeps her awake, right? The nicotine is a stimulant, right? She's drinking coffee too, right? Dolores, get over here. I'm going out for a cigarette. You got to get this guy another cup of coffee. All right, now take a look at the butt over here, okay? Now, the butt over here, you can see the big cheek. This is our anchor wave coming down here, but the money is really where you see that tiny little butt cheek over here on the right-hand side, right? You can see the $100 bills hanging out of there. Right? And that's where the price gets the pivot to the upside, right? We can see it's got a divergence right here, right? Price is coming lower, momentum's coming higher, all right? Over here, we can see price coming higher, momentum coming lower. That's called a divergence, all right? A divergence, and it works for longing and shorting. And so I imagined that I wanted to see this, and so when we do see that happening at the golden pocket, that is when we execute the trade. Look at what happened. Price came up to our level, and we saw the momentum waves. The left cheek over here, the anchor, and then Dolores coming over here at the diner with the cup of coffee, the trigger. That is our entry, okay? Now, step 3 and step 4, these are very, very important, okay? This is where people messed up. You could be very good at trading. You could be very good at these first 2 steps and still be a horrible trader. People ask me all the time, Jason, if I take your course, and by the way, I have a course on this, guys. There's a 25% discount in the description. This course will give you the blueprint, the very clearly defined point A to point B strategy, so that you always have multiple plans in advance, so that you can come up with plans like this. And you could come to a chart any day and say, you know what, I don't have to FOMO because I know if price pumps up from here, I have shorts I'm looking to take. I know if price dumps from here, I have longs I am looking to take. There's never any need to FOMO. There's a 25% discount in the description. This is changing the way thousands of people approach the markets. I even have people in my VIP Discord who have taken this course, internalized this stuff psychologically, and have actually quit their job to trade full time. It's absolutely outstanding, okay? You could check that out. But people ask me, Jason, if I learned this stuff, am I going to be a good trader? And my answer is always, it depends, guys. It really depends. And what do I mean by it depends? You have to be confident in your technical analysis and stick to the plan, like this guy right here. You are not going to see a man walking around in adult diapers with that kind of smile with his hand on his hip like that. You know what I'm saying? You ain't gonna see that. Why? This man is confident. He has done his analysis, right? He has taken the time to pull his fib in the most dangerous situation, driving the car down the street, pulling out the fib on the car, not even looking at the road, okay? By the way, I don't recommend doing this because you could get wrecked, okay? I'm not talking about losing money either. I'm talking about literally getting wrecked, right? He is confident in his analysis as opposed to this woman right here. Nervous laugh. You can tell body language, hand on the neck. Oh, I'm just so unconfident. I'm so insecure. This is where step 3 and 4 really come in. People can do their analysis, okay? But then they don't wait patiently and stick to their plan. They've taken the time to do their plan. They've risked their lives doing the plan. They know that they're waiting for Dolores. Okay, they risked their life pulling the fib in the car. They know they are driving to see Dolores, but what happens is this. Okay, they might, for example, see the price coming up almost to their level. All right, let's see. Okay, like this, right? They've been waiting. They've been waiting, and they see price coming up here. And we have to understand, guys, that these are 6-minute candles, right? So for almost 20 minutes, price, they're getting ready to push that buy, that sell button, right? They're getting ready, and then, ooh, it starts to drop. 6 minutes goes by. They're like, it'll probably go back up, right? Doesn't go back up. 12 minutes, 15 minutes, 16, 17, 18, 20 minutes. And Dolores never shows up, but the price is dumping, and they're like, you know what? I got front run. Let me short now. Let me short right now. That is a one-way ticket to Wrecked City, guys. I'm telling you, okay? I'm telling you. Instead, what you need to do is you need to stick to that plan. If price doesn't come to your level, if you don't see the woman that you are hoping to see, you must not enter that trade, okay? You need to have patience and discipline. I have seen so many people take the trade like this, FOMO in late, okay? They had their plan, but then they end up taking a trade like this, right? Like this. And they're like, oh, it's a good risk to reward ratio. I'm right at the pivot, right? Well, what happens? Boom, stopped out, right? And then what? Their trade happens anyway. And this leads to a vicious cycle of taking a loss and then not having the cojones to get into the actual trade that they waited for. And so they take a loss, and then their plan plays out anyway, but they don't even get to make the money because they're playing psychological games with themselves. This can be stopped immediately by just waiting for the plan that you had. Stick to it. And then when you get your alert and you open your phone and you are at the diner drinking a cup of coffee and you see Dolores there, all right? This is where you need to execute. Don't be scared, y'all. You made the plan. Stick to the plan. Stick to the plan, okay? If you are scared, because people say, Jason, you know, I can tell that the trades are going to work out, and so, but I get trigger shy, and then the trades I do take, I take a loss, and then I'm too nervous to enter the next trade, and that ends up being a win. Here's how to cure that, guys. Don't be scared. Step number 1. If you made that plan and you know what you're looking for, and it's playing out the way you had envisioned, just take the trade. Could it be a loss? Yes. That is part of the game, which leads me to the next step, which is use good risk management. The course goes over using good risk management, but basically if you are using responsible risk management that is mathematically crafted so that you will not be losing more than what you can afford to lose so that you can make it up in the coming trades, you are gambling and not trading. Okay, so if you are scared to enter a trade because you might take that loss that will really set you back, you're risking too much. There are ways to risk very, very little while potentially making a very juicy gain, and we do go over that in the course. Also, if you want to learn how to trade with Orderflow, which is something that we go over very often, we do one live stream a week where we go over the live Orderflow charts at New York Open. If you want to learn this stuff, check out the advanced course right here. There's a preview that you can watch to see if this is something that you are into, where we go over basically everything that you need to know about this, TPO, market profile, stuff like that. There's a 15% discount in the pinned comment. You could check that out as well. But, guys, use good risk management. Don't be scared. Stick to the plan. These 4 things, if you can internalize these, they will help you very, very much so as you navigate these markets. And so that's kind of all I wanted to talk about in today's video. I pray that everybody is super, super blessed in the name of Yeshua the Messiah, Jesus the Messiah. God is good. And yeah, that's all I really want to say, guys. So peace. Make sure to like the video, subscribe to the channel, and peace.